Buying your first rental property just got easier and better. What's up guys, my name's Avery. I've been investing in real estate for the last half a decade and I recently got my real estate agent designation in the Raleigh, Durham area of North Carolina. And this channel is all about real estate, investing, and the agent business. I bought my first rental property back in 2019 through the easiest way to get started in this industry, in my opinion, and that's through house hacking. House hacking sounds pretty cool, but it's a very simple thing. Someone just came up with a cool marketing name, and essentially it's just when you buy a property, live in some of it, and then rent the rest of it out in hopes of covering your entire mortgage or some of it so you can live on the cheap. And so that's exactly what I did. I bought a duplex in 2019 and I purchased it with an FHA loan, 3.5% down payment, roughly $18,000. Renovated that property and then I rented out the other rooms in my unit and rented out the other unit, and I was able to live for free and make a little bit of money over my mortgage, which really helped my life a lot, allowed me to save a ton of money and then do the same thing a year later and buy and invest in a lot more real estate alongside while working my job. And the key there is when I bought my first property, I used an FHA loan. And now this is a very standard loan type for people to buy their first property, but it also allows investors who are at the beginning stages in order to get in for a lot less money. So typically that FHA loan allows you to put as little as 3.5% down on a multifamily property. And so otherwise I would have had to put 25% down on a property. So my down payment was $18,000 versus $100 and something thousand. Now at the time when I bought that property, I was making 65 grand a year. There is no way that I could have saved up $100 and whatever $1,000 in a couple of years versus being able to do it pretty quickly because I needed to put much less money down. And also a disclaimer, make sure you don't forget buying a house is not just a down payment, there are also closing costs, and you should have a little bit of money saved for repairs because things are going to break inevitably when you buy a property. So that's the fantastic thing about an FHA loan. It does allow you to get into real estate a lot easier, especially as a beginner when you don't have a lot of capital versus otherwise just getting a conventional investment loan. But you do have to live in the property for 1 year. It could be real disgusting and there could be a lot of issues and things that you learn about, but at least you're going to be at that property and you don't have to put all of that money down that you probably wouldn't have had in the first place. There are obviously some drawbacks with this FHA loan, just like there are drawbacks with absolutely everything in life. Otherwise, if you wanted to do a conventional loan and you were still owner occupying the property, you could put 15% down. Now that's different than what I just said about that 25% down with a conventional investment loan. Conventional investment loan, don't have to move into the property. Owner occupied conventional loan, 15% down. So we have our 3.5%, our 15%, and our 25%. But coming up in November of this year, they are changing that 15% loan. So it was just announced, instead of putting 15% down for a conventional loan, you can now put 5% down or have 95% loan to value. Now you may be thinking that's 10% less down and that's awesome for a conventional loan, but the FHA loan is still 3.5% down. So why would I not want to pick the 3.5% FHA versus the conventional loan? Again, that FHA loan has some drawbacks, but it is a very awesome product. You can have a low credit score, still get into real estate, not need a ton of money. And 1.5% down more could be a big difference between you and having closing costs and extra money saved for that property. But the difference between the conventional loan as well as the FHA loan, well, there are a couple of things, but probably the biggest thing there is that the PMI can drop from a conventional loan. So PMI is an added cost to your loan when you have less than 20% down. Right now, for example, my 3-family that I bought, the second property that I purchased, I have roughly $500 a month that I have to pay to my mortgage that is pretty much an added insurance cost because I put so little down, so the bank feels better about lending me that amount of money with me not really having so much skin in the game. With an FHA loan, that amount of PMI will stay with your loan for the entirety of the loan. Typically a 30-year loan is what most people are doing. The only way for me and for you to get rid of that PMI is for you to refinance into a new product, which will have closing costs that can be pretty similar to the amount of closing costs that you had to spend in order to buy that property in the first place. Could be anywhere from $5,000, $10,000, potentially more or less than that. But with a conventional loan, you're able to just drop that PMI once you hit a certain amount of equity and it's been long enough. Typically it's around 20 to 25% equity once you have that in the property. It doesn't just automatically drop, although it'd be nice if it would. You do have to still get an appraisal on the property or a broker price of opinion record. So essentially someone comes to your property, checks out if it is worth what you think it's worth, and there still is that equity difference between the amount of money that you owe and the amount that the property is worth so that they can drop that PMI. Now, getting that done is way cheaper than doing a refinance. It's going to cost you probably somewhere between $200 to $700 in order to drop that PMI versus the multiple thousands of dollars to refinance out of that FHA loan. The other massive difference between these two loan products, if you're interested in getting into house hacking, is the self-sufficiency test. Now, the self-sufficiency test for an FHA loan only impacts a 3-unit and a 4-unit building. If you have a single family condo or a duplex, you do not need to care about this. And the self-sufficiency test is a pretty simple test. You pretty much need to make sure that of all of the gross rents that you would get for the property, assuming that you aren't living in one of the units. So let's say we have a 4-unit building and each of those units would rent for $1,000. So that's a total of $4,000. 75% of those $4,000 needs to be greater than or equal to the mortgage. So in this case, if we had $4,000 of rents and a $2,800 mortgage, we would be in the clear because 75% of $4,000 is $3,000. And hopefully that wasn't too much math, but I studied math in college, so in my head that seems pretty easy and makes a lot of sense. That test is only for 3 and 4 units when you're trying to house hack with an FHA loan, which pretty much means most 3 and 4 units today with high interest rates and potentially high prices and rents maybe not have been caught up yet will not be really allowed for you to get that FHA loan, so a lot more people are looking at duplexes. But with this 5% conventional loan, the self-sufficiency test no longer matters, and that's really awesome because 1, the PMI will drop, 2, the extra 1.5% down that you're putting is still going towards equity in the property. It's not just an added cost that you're throwing away. And 3, that opens up more opportunity for you to buy a 3 or a 4 unit and for it to work for you as a house hack down the road. Now, of course, you don't want to just buy any 3 or 4 unit property, but it's possible you get in with an 8% interest rate, refinance later, and also rents eventually will come up because rents usually take a little bit more time to increase than it would a property value. So let's say that normally your mortgage was going to be $3,500 when you have those $4,000 of rent. Over time, maybe you can get that $4,000 up to $4,500 and it is a good investment. But today, that $4,000 of rent is what you're gonna get. But if you live in that property for a couple of years, maybe the rent increases, maybe you do some value add and you can get those rents up. So eventually it would pass that self-sufficiency test, but it wouldn't today. So it just gives you more opportunity to buy a 3 or a 4 unit building in today's market. Really, this is an awesome update and it will make it easier for you to get into investing in real estate. I felt like in 2019, it was a lot easier for me to buy a house hack, even though at the time, it felt like I wish I had bought one 5 years earlier. And I'm sure people 5 years from now wish they were able to buy one in 2023 or 2024 or whatever year it is that you may be watching this. So I think it's only going to get more difficult, but at least this makes it a little bit easier. I also think house hacking is the #1 easiest way for you to get started investing in real estate. You really do want to buy a home in your life, and this is just a different way to buy a home where you may have other people living under the same roof or in rooms that you're able to rent out. So it just makes it a lot simpler than you having a massive mortgage for a home that you don't really need and can't afford. At least if you have other people in there and you have a modest home that you could potentially afford without those renters, you're going to be in a good spot, and then a year later or a couple of years later, you can move out, do it again, and then completely rent out that property, create yourself some cash flow, and let that snowball keep rolling. I hope you guys enjoyed that video learning about loan types and potentially for you to be able to utilize one of those for your house hack that can help you achieve financial freedom, because I know house hacking really helped me achieve that myself. And if you guys did like that video, please scroll down and make that thumbs up button blue. And if you want to learn more about real estate or the real estate agent business, also while I learn about it, then definitely go down and hit that subscribe button. Thanks again for watching, and more wealth is coming your way.